Hello traders, this is favour, market analyst for City Index. Today is the 20th of January. So we saw the US dollar plunge across the board and index futures rallied on a Wall Street Journal report that Donald Trump is not going to impose tariffs from the get-go. We also saw oil prices fall back because the report mentioned that the president will use his powers to boost energy production in the US. So that's another factor to watch. But looking at the dollar CAD currency pair here, it is coming down to test this 143 support level, which has held on a couple of occasions in the past. But if you get a daily close below it, I think that would make things more interesting for this currency pair moving forward. Watch out for those reports to be denied. And if Trump mentions that he is going ahead with those tariffs regardless, then we could see a reversal in this trend. So the key level to watch in the short term is 143. If we get a decisive break below that, then 141.75 level will come into focus, which had been a resistance in the past, and it could offer some support, this level right here. In terms of resistance levels to watch, the low from the previous day, on previous trading day I should say, comes in at 143.82, thus marking the low from Friday. So that is the first level of resistance now to watch. If we get a move back above that level, then we could well see fresh new yearly highs for the dollar CAD above today's earlier highs of around 144.85. Now here is a daily chart of crude oil prices. As you can see, prices have fallen on the back of that Wall Street Journal report. Before today's fall, oil prices had staged a 2.5-week rally to start positively in the year, breaking some key levels of resistance and moving averages in the process. It also took out this bearish trend line that had been in place for several years. But if it now fails to hold above the trend line, then that could be a big bearish signal to watch out for. So keep an eye on this level right here at 76.41, marking the low from Wednesday's low, when crude oil prices formed this large bullish engulfing candle. But the fact that we are trying to break below it, and if we can hold below it, that would be a significantly bearish development in my view. But the day is still young, and we could well see a rally off the lows. So it's important that we get a confirmed daily close below this level to trigger a short signal for this market. In any case, the next downside target is not very far at around 75, which is the 200-day moving average and prior resistance. I think things will get more interesting if we start to break below this trend line that I'm going to draw now. That happens to come in right at around that 75 level. If we break below that, I think that would be a bearish development from a technical perspective. In terms of resistance levels to watch, 77.15 now, marking the low from Friday, is a key level to watch. Above that, we have that October high at 78.31, which has been tested on a number of occasions, but we haven't decisively broken above it. So those are the next resistance levels to watch, or potential resistance levels. And if we see further struggles around these levels, then we could well see a dip back down to 75, possibly the low 70s in the weeks ahead. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.